Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta as always. And this is a down day for the market. There's no two ways about that. But you know, in the past few minutes after we got that severe drop at around 1 o'clock, things have sort of eased off a bit. So the Nifty is at 19,156 right now. We're around 80 points off the lows of the day. The mid and small cap index have both recovered around 1% as well from the lows of the day. It is still, you know, a sharp cut that you're seeing across the board. So the mid cap index is still down around 0.6%. Small cap also seeing a big cut right now. But Ekta, at least, you know, that there's a little bit of a recovery that has come through and things have not fallen after that. We still do have, you know, an hour and a half of trade left, so it could go either way, I guess.
Hi, Pavitra. Yes, absolutely. And, you know, it'll be crucial in terms of overnight headlines and what's taking place geopolitically. But in any case, we do have a lot of queries to answer this afternoon. We have Rajat Bose joining in on the technicals and Parthiv Shah, who's joining in to discuss a couple of queries that we have lined up for you. But before we get to those questions, Rajat, just wanted your thoughts. You know, Pavitra was talking about the fact that we've managed to recover from the lows. For the Nifty, today's low stood close to around 19,000 in terms of those levels. To be precise, it was around 19,074. So in that sense, how important is that support now, according to you, and the fact that we managed to recover from those levels?
Well, I have been advising people for more than a month after that September 15th high made at 22. In fact, on your program also, I have told that I was mostly giving people to get out of the positions, exit the positions. If you remember, I mean, we technical analysts do care about these things. That in 2008, the lemon moment that began from middle of September, either it was 15th or 16th of September, and it continued till about 28th of October. That time also there was real mayhem. Whether the mayhem is happening in Dow or not, but at least we are facing a lot of problems out here and the stocks are falling. What I would say is that there is a possibility because of certain death crosses like 9-day moving average cutting 50-day moving average, and both are sloping downwards, and even 9-day, 20-day moving average that is also giving a death cross. So this double death cross kind of situation actually foretells that there would be further lower, downside movement. But I would like to say one thing, that is, there is going to be a rally. Most probably the rally might happen next week. That rally, even if it goes up to something like 19,600, 19,700, if for any reason we reach there or any higher level that you get, that would be a suckers rally, and that should be used to exit positions unless you are you are holding very strong, fundamentally very strong stocks, and you are willing to hold them for several years. Otherwise, this is not the end. Lemon moment actually it was the end, and after that there was a sideways movement. But this time, this will be an intermediate downswing, and after that there would be further lows going forward. I don't know how much your viewers will like this view, but the point is that I have checked many stocks and most of them are showing topping formations, and they are likely to go down. I'm not saying that fundamentals would become very bad or something. Fundamentals, say for instance, one may say that ICICI Bank or Infosys or some other stocks have produced such good results, and why are they not moving up, or why are they sideways, why are they going down? Because it is a topping formation. Buying power has been exhausted. That's the reason. And the mid-cap index would suffer very badly going forward. So when mid-cap stocks and small-cap stocks, they would like, those people who bought these stocks, when they want to sell, actually there would be very little, the doorway will be very small, and there will be stampede at the gates.
Okay, got that. That is on, where the markets could be headed from here on. For the mid-cap index, this week itself, we've seen a 3.4% kind of cut. That is in, 2 trading sessions. The small-cap index is down around 4.2. But remember, these indices have also run up so sharply. If you look at it for the year, they're still seeing around between 22 to 25% in terms of a gain. So do keep that in mind. But with that, let's move on and, get to all of our queries, because there are a lot coming in. People do want to know what to do with all of their positions at a time like this. We have Mayura, who writes in from Mumbai. He holds 200 shares of Kaveri Seeds, which he bought at 620 per share. So making a little bit of a profit there. He wants to know the long-term prospects of this stock. Parthiv, considering that he is, very clearly saying he wants to look at this from a long-term kind of perspective, what would you advise on Kaveri Seed?
Kaveri Seeds has been a very good well-run company, because we know that genetically modified seeds in the country, very few players have been able to crack it. And Kaveri Seeds as a company has done reasonably well. But there are always regulatory hurdles in this field. And that is a key reason why the stock has been languishing since a very long time. Of late, looking at its pipeline, there aren't much triggers. So our sense is that it's better to go into some other agrochemical sort of companies. And in that space, we like Bayer Crop Science. This is a global MNC giant, which has very good presence in the country. And every year, they're launching 2 to 3 new molecules, which are, I think, industry leading and don't have much competition. The return ratios are also extremely good. No doubt the agrochemical cycle and the overall agri product segment is quite tepid, because globally also we see that there has been a lot of price correction in these chemicals. But going ahead in India, I think with the productivity increasing in the farm sector, we believe companies like Bayer Crop Science should do extremely well.
Okay, Rajat, would you have a view on Kaveri Seeds?
If you are a short-term player, I would say that this is the time to book profits. If you are looking forward, say 1 year down the road or so, Kaveri Seeds you can hold, or suppose if it were to fall below, say 600, if you get it anywhere between 560 and 580, when market falls, even this might fall, that would be the time to buy it, because this is one chart that is not all that bad, and it is not showing a topping formation as yet.
Okay, all right. So that's on Kaveri Seeds. Let's get to another query now. We have Akshay, who is on the line from Jaipur. He's made investments in NBCC. Hi, Akshay. Tell us.
Yeah, so I have around 5,000 quantities at the price of 44 invested in July. So I would like to know the future viewpoint.
Okay.
Should I hold it? Yeah.
How long are you comfortable with holding the stock for?
Nothing as such, like even a year is fine.
Okay, you up to a year. Well, Rajat, what would you recommend on this holding and this query?
Well, 1 year is too short a time for NBCC. A lot of people who in an earlier year, when it was around 60, 63, they saw the lows of 30 or even lower. And after that, it has come back to the same level. And now, over the last 3 days, it has suffered considerably. Now, if it were to fall below the level of 57, then it will become very weak. So hold it with a stop below 57. 1 year is not right, because you see one thing, in July, the stock was around, say, 36, 38, below 40. From there, it has moved up so much. Now it will consolidate for a long period of time. Unless you have some specific information or specific fundamental development which would propel the stock even further up, then you can continue to hold on. Otherwise, I would say, be in cash. You will get great opportunities over the next 4 months.
Okay, got that. That is on NBCC, currently at around 62 rupees. Parthiv, your call on NBCC, and do you think it makes sense to hold for, up to a year? He is making profits. Do you think this is a good time to be holding this stock?
See, Bhavitra, I do agree with Rajata's view. This stock has had a stellar run. And no doubt, this is a very good proxy vehicle for the government in terms of execution of a lot of real estate projects. Especially, they are very big in project management consultancy, and a lot of government barren land is what they tend to develop. And even in the EPC segment, they have reasonably good projects. But of late, what we've been witnessing is, despite having very decent order book, the execution track record hasn't been very great, in the sense that the type of margins, the type of working capital cycle that one would expect is not really coming up. So it seems that the stock, after this massive run up based on the sentiments of the government infra spend, I think is pricing in all the goodness, and it's better to wait on the sideline or book out some profits, because the investor is sitting on decent profits. See a couple of quarters how they execute. Based on that, I think the stock will move. But I believe the stock currently is fully valued.
Okay, got that. On NBCC, perhaps it has seen much of the run that, was expected on this stock. Moving on now, Deepak Dave writes to us from Gujarat. He holds 240 shares of SRF at 24.50. He's a long-term investor and wants to know whether to stay invested or to sell at current levels. Parthiv, like we were discussing, this entire chemical space has been under pressure for a while. And if you look at any of the global players, they are continuing to warn of issues on that front as well. Today as well, we had a view coming in where a big global company has gone ahead and cut their guidance once again. What is your call on SRF? The stock has not done much. It's actually sitting on cuts of around 15% for the year. Do you think it's best to get out, or would you recommend staying for a bit?
Very rightly you pointed out, in India, in the chemical segment, we have two categories of companies. One is which produces bulk chemicals, where a lot of consumption takes place domestically. And then there are likes of SRF who are very good innovators and who have been able to cater to a lot of global MNC customers for developing their molecules and also supplying them a lot of raw material inputs, especially in fluorine chemistry, where they've done extremely well. They're also into technical textiles and other specialty chemicals. See, this is a tough cycle for a lot of these players, and SRF has corrected from its peak valuations to almost levels of 20-25%. And our sense is that this is a company which will do well over the long run despite this current cycle. And if there is any further correction, I would rather advise to add on to this position, because SRF has targeted a capex of almost 15,000 crore over the next 3 to 4 years, and a bulk of it will go into the chemical segment, where they're trying to focus on a lot of import substitute products and also cater to a lot of global clientele, which is a niche business model. Not others can easily penetrate into this segment. So SRF, I'm also hoping that the technical textile business tends to improve. They also have a packaging business which has been little weak, which is causing weakness in the share price. But I think one should add on any declines over the next 3 to 4 years.
Okay, all right, gentlemen, thanks very much for joining in and giving us this perspective. That's all the time that we have on the show. But do remember that you can always email us all of your queries and we'll address them with our experts. Stay tuned, closing bell up next.